Hello students, new class of accounting, basic accounting for O level and A level students is here. Last class we had discussed about the 5 pillars or 5 main accounts of accounting, which are assets, liabilities, capitals, revenues and expenses. We had discussed earlier what are current assets, what are current liabilities, what are fixed assets, what are non-current or fixed liabilities, and expenses and capitals and revenues, about etc. Now we will discuss how we record these in the books of accounting, and the accounting books is recorded, completed, is called the steps of accounting cycle. In accounting cycle, first of all, we have journal, and the process of journal is called journalizing, and the second step, it is called ledger posting, and in skeleton form it is called T accounts. The third step is pre-closing, trial balance. The fourth step, the most important one, is called adjustments, or it is also known as adjusting entries. After that, we have another trial balance, which is called adjusted, or by some authors after adjustment trial balance. After this, we have closing entries, in which we closes the accounts of revenues and expenses. After that, we make income statement, or it is also called profit or loss account, and by some authors trading and profit and loss account. Further, we make balance sheet, which is also called in special topic single entry statement of affairs. And balance sheet told us about the financial position of the business, at which level the business is present. Therefore, by balance sheet, we get the correct position of the business, how many assets we have, how many liabilities we have, and now what is the current position of the business. And the last one is called post closing trial balance. So, in each period, whether it is 1 month, whether it is 1 year, the accountant completes all of these steps which are called the steps of accounting cycle. And now, how can we record? How will we record it? In other words, we record them in the books as like these. Some people says, some of my teacher says, accounting is nothing but just a game of debit and credit. Some students are confused with these words. What are debits and credits? Simple. Incoming debit, outgoing credit. In accounting, we record these debits and credit as under in terms of increase or decrease. Remember one thing, we are not the owner of business. We are the accountant of the business. Therefore, these increase or decrease are termed to show the increase or decrease to the accountant. Likewise, for example, when assets increases in the business, it will be recorded at the debit side. Obviously, when assets at the credit side, liabilities increases in the business at the credit side, and if liabilities decreases at the debit side. The third one is capital. Capital increases, record it at the credit, while if the capital decreases, record it at the debit side. Assets, liabilities, capitals. The next if revenues increases, record it at the credit side. And if revenue decreases, record it at the debit side. The last one, expenses, when increases, record it at the debit side, while if expenses decreases, record it at the credit side. So these are called the rules of debit and credit. It is a very short class because in our next class we will discuss how to record in the books of accounts or in the journal these according to the rules of debit and credit. Transactions will be given to us, and after those transactions we will record them in the books of original entry, which is called the journal. Till then, bye.